let's look at tokenizing a fund, and that's what our framework was used for. So we use that framework to tokenize the Lasers carry fund and then bring it on chain. Because again, there as well, we found the use case now. Of course, number of funds, including one of our joint venture, Myco, which is a tokenization platform, which is today has tokenized number of funds out there. And so we felt that having, working with VARA, getting the license, getting the framework in place will allow us degree of freedom to actually launch some of these, tokenized funds.
Welcome to the Encrypted Podcast, your gateway to the future of technology and innovation, right here in the heart of Dubai's dynamic tech universe. I'm your host, Maria Vovchok, and together with Dubai Blockchain Center, we are embarking on a journey that unravels the minds of tech visionaries through the digital frontiers that are shaping our world. Hello and welcome everyone to the Encrypted Podcast. I'm your host Maria Vovchok, and today we're really happy to have here Dr. Jez Mohideen, who is the CEO and co-founder of Laser Digital, which is Nomura's group's digital asset arm. Dr. Mohideen has a fascinating background history. He has previously served as Nomura Chief Digital Officer and has rich history in systematic trading in AI, including time and Brevin Howard. He holds a PhD in process system engineering and has published extensively. So we're thrilled to dive into his insights on the digital asset industry today. Dr. Jez, welcome to Encrypted. How are you doing today?
Thank you, very well. And it's my pleasure to be out here. Thanks for obviously getting me out here.
I would definitely say that there are so many things that I still maybe haven't mentioned yet. What do you believe our audience should know about you? Like some of the very, some of the pearls from your background.
Not a lot. I came from a very academic background. My origins are in very heavy math-based subjects.
Oh.
And went into engineering and decided, I started chemical engineering because I thought it kind of gave me a bit more insight into how the world operates, because chemical engineering is I would say part of engineering. It's the cornerstone of many things, whether it's food, pharmaceutical, technology, many things. So that was what led me into it. Then, of course, towards the end of my first degree, I realized it was not enough for me.
Not enough.
In terms of insights and the depth of knowledge, how deep the first degree goes. So I thought I want to continue further degrees, and then university encouraged me to carry on, and then ended up doing a PhD in process systems engineering, which is a lot to do with optimization and early stages of AI. So a lot of the math and the engineering knowledge extracted from that is heavily used in today's AI, deep learning and optimization techniques. So that kind of gave me a lot of insight into how to systematize or build a process formulaically, programmatically these days, how you see in the Web3 universe, and then ended up teaching or doing postdoctoral at the university for a little while. I thought I was going to go in the direction of academia, but then found it, at one point I want to go into the industry, and then decided out of everything, go into the world of finance, which was, which was a huge moment in the sense that both my parents and my family, everyone who thought I would go into engineering, decided suddenly. The reason I did that, I thought actually even financial systems is a process. If you can design better, if you can understand better, you can do very well out of it. So yeah, started from a very academic background, then into completely more practical side of things, application.
So by the way, we will still focus again on process system engineering. We'll get back to that. But right now, one of the things, like let's say big elephant in the room, is actually you made quite a leap from TradFi to DeFi. Sure. Because as you said, like later on you decided to go into TradFi. Right now, with everything that is happening in the world of decentralized finance, I would like to know, so you were actually really agile in this case as well. So can you please say as well, taking into account your background in systematic trading, macro, how did it influence what you're building right now at Laser Digital?
Yeah, I mean, I think there's a lot of similarities. So if you really look at it from a Web3 and digital asset DeFi perspective, that the real base layer of most of the digital asset is trading. Right? That's where bulk of the activity is, whether it's exchange or liquidity. It's a liquidity provision. My background is last 30 years I've spent in market making and creating liquidity for clients in traditional assets, primarily heavy focused on fixed income. That's my background. So both building in understanding how the fixed income operates, that's the macro background came in, and even today crypto markets move heavily based on macro dynamics.
When you said about this in the past, was it mostly in Brevan Howard or was it at Comaino?
No, I worked for many banks in the past. So before going into Brevan Howard, where I heavily focused again systematizing using technologies around AI, how can you build market maker, how could you build a systematic trading using data and knowledge, because up until the point of I guess the deep learning usage was not known until the deep mind kind of inflection point, right, in 2012-13 when they had the chess game and the Go game, when they showed how the AI agents can learn a lot faster very quickly. So
you learned about that like when it was not exactly still not the hype at the very beginning. Tell us more about that part.
Yeah, so for me, what I had a lot of knowledge on macro. I had a lot of knowledge trading for a number of years, but it was completely divergent to what I learned in uni days and theory. That is during my PhD days and all that. So kind of almost I think around 2012-13 I came to a moment that I said, okay, a lot of the stuff I've learned now potentially can be applied to real life. Because we were way ahead of time at that time. I mean, in the 90s when we were learning about some of these optimization techniques, how could it be applied real world applications? It didn't exist. One thing, you didn't have the compute power. You couldn't solve realistic problems, but only in, I would say, 2010 onwards, you started seeing this huge compute power coming through. With that, you can solve real world problems. So at that time is when I realized, could you use all the knowledge I've acquired, which is heavily needed, because half the problem with even doing kind of solving systematic trading or even like I would say agent-based, AI-based technique is you need to have a lot of deep domain knowledge. Then the rest is data, be able to process large amount of data. So I thought, this is the time, let's try and experiment and see, can you really build something more systematic using some of this deep knowledge. It was an interesting period. So it was at a time I thought I took a pause and saw, okay, could I actually build an edge in my own trading gig, and that kind of helped me to kind of go more in depth into all the way from systematic to Web3 and where I am today, I think.
Yeah, so talking about right now about Lazy Digital, because as I mentioned earlier, you led in the past ventures like Comaino before co-founded Lazy Digital. Which unique vision do you believe that you have, that you brought when you actually co-founded Laser to stand out in this competitive Web3 market?
Yeah, I mean, the fundamentals are the very same. That is, ultimately you need to solve a problem what the market really wants you to solve, as opposed to kind of go the other way around. Because at times you see that in a lot of technology, even in crypto world. So for us, the main issue there was liquidity. And initially, obviously, Comaino was, which was a custodian, where a number of us came together. When we set up that joint ventures, we couldn't get into digital asset from an institutional perspective without understanding how to safeguard the asset. There's no way we could have got the approval from the conservative traditional financial operator like Nomura, that how could we actually even start trading if you don't understand fully how to custody these assets safely.
So how did you in this case?
So when we presented to the board, I remember my current chairman actually was a big supporter. That he's also come from very similar background, but he kind of understood at first go when I said, okay, first we need to crack the problem of custody. If you can custody these assets, then we will be able to trade and do other things. Then he said, okay, let's partner with the real deep domain knowledge experts and the real users in the industry. So we didn't go our way to say, okay, within the bank we'll create our own custody. We said, okay, let's partner with the users. Let's partner up with also deep domain knowledge in that space. So three-way partnership with a cryptographic security firm, asset manager who deeply required a good solution, institutional solution. We brought all the kind of, I would say, know-how from a traditional broker dealer, bank perspective, governance, trust, aspect of it. So three-way we came together, kind of experimented and built a solution. What it gave us comfort is that it's a real use case. A user is there. User is actually testing as we go along. A real dynamic user. At the same time, the security side of it also we are leveraging from a company which has spent a lot of money building sophisticated security. So that we are ultimately the traditional kind of the bridge we were going to be, and that partnership also meant we went slow. We didn't go very quickly. Our need was not to build something very quick and go for a fundraise. We felt that build something which works for all of us and gradually bring it to the market. So that gave a lot of confidence to also a traditional operator like our main stakeholders that you're building something, user base is there, and gradually you're getting in the market. So that gave a lot of, I would say, confidence to the entire ecosystem as well as our own partners.
When I mentioned earlier about your as well PhD in process systems engineering, take into account your technical foundation, your technical background, how does it shape, first of all, your leadership in your company? And how, in this case, how does it help you to build the products that you're offering to your users?
I mean, it's the Web3 world is evolving very fast. So I think one thing we've learned as well, I myself have learned, is that you need to be very dynamic.
Yeah.
It's evolving. We've seen over the last 2-3 years how it's evolved. It's much more dynamic than traditional world, which is traditional world is well treaded, tested. You're trying to optimize on the edges. This is even the core, bedrock keeps changing, right? So obviously pivotal moment when the ETF came, Bitcoin, we all kind of knew it was going to, the institutionalization was going to happen. When it happened, when people understood the real kind of dynamics, that was, I would say, the huge moment. Now, in terms of our own product creation and building the entity, what we realized earlier on is very difficult for us to focus on one part of the ecosystem. We were, from an institutional perspective, we said, okay, let's just make sure we are wide at the early stage so that we don't bet very heavily on one, because we were not heavily retail focused. So therefore, for us, we are not seeing the first wave of the adoption. Because first wave of adoption in digital asset Web3 has been in retail.
Yeah.
Institutional come in second leg of it. So because we were originally focused on the second leg of it, so we need to make sure that it's wide, our product development, and therefore the danger also you end up spreading yourself a bit thin. So that was the approach we took initially. Now, of course, looking back at it, we can say now today we could have been a bit narrow, but I think that's been okay for us, because that meant we said we want to be asset manager, we want to build a broker dealer. Why is it? Broker dealer gives you the liquidity, deep liquidity you provide to institutional clients. Ultimately, if you don't provide liquidity, then difficult to get any product adoption. So once you build the liquidity, once you give liquidity to your client base, then of course build products to kind of asset manage yourself. So that was our thesis. Hence, we went with both these major pillars. That's been relatively successful. Still, time will tell, because the institutional adoption is now picking up. There's a lot of institutional projects right now announced, but the adoption is slow. It's coming through, I would say.
But by the way, as you are, as I mentioned this earlier, you're kind of blending a traditional risk management with crypto native needs, we can say so. Would you say that at this moment, even if some institutions are still slow with adopting crypto, but it's a necessity for them? So are you trying to tell them that this integration is so important for institutions, they can be, in this case, not touch that? How do you feel about that? Is it the case? Or still a lot of them, the one that you're talking to, they're still saying, we still don't need it, it's too early?
Yeah, I think it was the case. Probably, I would say 18 months, 2 years ago. More recently, you're starting to see significant. Suddenly, you're seeing a wave of. Despite, I mean, that's the what you're seeing last year is in the if you look at the digital asset market, if you look at the price process, it doesn't indicate the size of the adoption coming through.
Still doesn't.
So if you look at the price process of
Yeah.
Bitcoin, like you would say beginning of, I mean, the whole of last year, it was almost unchanged. But the amount of institutional projects have come through last year
Yes.
does
That's what I'm
not
saying.
show you.
Yeah, that's an interesting point because on the one hand, why I'm asking you this, I've heard so many institutions, like if, for example, 2 years ago, 2 years ago, they would say, oh, we're still look at that, but we're not going to touch it. Right now, it's almost like a necessity. You have to do that. But at the same time, obviously, they are like, I don't know, maybe they are allocating 10% of their assets to that. Like, so it does not exactly extensively influence the crypto market. Can you
No.
say it from your perspective?
Yeah, I think that's fair because the institution when they come into it, it's a multi-year. They're not making decision for the next 3 months or
Yeah.
next 6 months. Whereas most of the native us, when we are in the business, we want to see immediately price process showed in the price.
Show the results.
Yeah, to show the results. But a lot of these guys, I mean, if you see major announcements coming through, large asset managers, multi-trillion asset managers, large banks announcing, we've never seen before, right? I mean, it was even just now we came after a meeting with the large asset manager, traditional asset managers. So one of the conversations are happening at boardroom. It never used to be the case. It used to be happening at the kind of working level 2 years ago. Now it's happening at boardroom decisions, right? So, but it's a multi-year investment they're making, and it's a multi-year trend. So, of course, it's not going to show up in 3 to 6 months or whatever. I would say next 3 to 5 years, you're going to see this adoption continue momentum.
Yeah. Dubai, home for innovations. Talking about asset management,
Yeah.
and talking about the investment products that you're in this case offering, how do they differ from the ones that have been already in the crowded strategies market? As we discussed, it's still not a lot of institutions, like they obviously direct their assets into digital assets so far, but at the same time, more and more are there, at least like part of their assets are there.
Yeah, I think the institution perspective, to your earlier point, the institution allocation of into digital assets has been very limited today.
Yeah.
But that is also a function of they are not all comfortable with everything which exists. So they want to see the evolution and the maturity of the platform, maturity of the regulation. Certain jurisdictions are not aligned. Obviously, we are fortunate. We are in a region. The regulation has gone a lot further and a lot clearer where we sit on. It's not the case globally. And typical larger institutions, they are global operators. They need to see a bit of uniformity around the globe before they allocate. But for them, they also need to get comfortable with infrastructure, all the kind of the reg tech side of it. And once they're comfortable, they're building it now. Today, they're partnering up with Web3 operators or they're building in-house. Once that comes through, my view is then you're going to see allocation picking up. Today, most of the, from institution perspective or from a crypto native perspective, most of the interest has been more yield-bearing products. The market wants to see that's why I guess money market funds have been very popular because it's a yield-bearing product and people want to use it for yield, and then also they want to use in DeFi and many applications. Less also non-yield bearing, so as you see adoption of, and then of course exposure to, of course Bitcoin has been, ETF tells you the institutional story. There's significant adoption because much easier people to understand the custody aspect of it. There's no regulatory issues. It's a financial, well understood traded ETF. So therefore adoption has been very easy.
Yeah.
But adapting to other products, I would say it will happen over a period of time when the most institution gets comfortable with the infrastructure they're using. And ultimately, I think what institutions also want to see the user experience to be familiar. That they don't want to see whether it's a Web3, Web2, or Web1. They don't care, the user.
Yeah.
User cares, only thing is it easy for me to use it? Okay, I buy an asset, it's on-chain. They don't care the back end is Web3 driven, or it's on a digital a protocol or not. So I think when it becomes seamless, the adoption will reach its escape velocity.
One of the things that you actually mentioned is you were just like discussing with one of the asset managers in a boardroom. I'm just really curious, what strategy are you using? Because obviously you need to bring, let's say, more liquidity.
Yes.
So how in this case what strategy are you using? I'm just curious.
No,
And
for
what
us,
exactly do they respond?
for us, we actually initially, everyone, we kind of iterated ourselves as well. We started initially, I remember when we launched some of our asset management product, we said, okay, let's bring major protocols. We will give the institutional wrapper for that major protocols. Let's see the adoption. It was not as strong as we thought. Then when ETFs came about, we realized even ETF, you look at the Bitcoin's success is nowhere close. I mean, if you look at others, nowhere close to Bitcoin's success, right? But it's coming through. Like now, of course, now you have Ether, Sol, but that's relatively benign compared to what you have seen in Bitcoin. So what we very quickly found out, just giving kind of a institutional wrap protocol through a fund structure is not attractive. Most of the people want to see kind of the major asset class, a yield-bearing token, or a market-neutral yield strategy. Because today, with Fed fund rates also going, obviously now going lower, people want to, average user want to see yield-bearing. So anything which brings yields, which is why money market funds are a big success. So we've actually brought to the market a yield-bearing product, which generates between 8 to 12. Previous year generated 20%. It's a market neutral, extracting yield out of digital assets. We thought let's launch a product like that, because that's where you will see institutional demand as well as a native demand. Then recently we've looked at it, okay, what is the largest asset class in digital assets? It's still Bitcoin. Bitcoin still people want to use as collateral. A lot of them are sitting on Bitcoin without earning an income, because it's not a yield bearing. There's no carry like a fixed income. So there is a demand. People are owning, if you look at that as an asset class, it's 2 trillion, and people want to have some income out of it. So we thought we'll go and build a product which gives Bitcoin plus yield to a Bitcoin holder.
Okay.
So that's something we're just launching as we speak. There are a number of products out there in the street, but we felt we will bring our own expertise to it.
But by the way, I'm really curious when we're talking about yield-bearing products, because, for instance, one of the biggest trends of last year, and I think it's going to be this year, it's obviously stablecoins. From your perspective, do you believe that, taking into account the regulations, that yield-bearing stablecoins, there will be more in the UAE?
I think so. Obviously UAE is also, I'm sure very soon we will have a AED stablecoin. There's been approvals around there that'll get issued. Yeah, for sure, yield. Ultimately, the user requires yield, right? They understand there's a yield and it's come. Historically, that hasn't been shared because of the regulatory reasons, because securities versus obviously utility and all that. But for sure, to your exact point, if you look at digital asset space, one real use case which has reached, a real success and real use case is stablecoin, right? That's the way. In a way, what we have done there is we have taken digital money and programmable trust into a real world use.
Yeah.
Right. And that's a very good example to base our thesis on. That's where the RWA, the rest of the real world tokenization comes in, and then the adoption of the rest. That's why we Laser is also there ultimately, not just to deal with crypto, but ultimately deal with the general digital asset market, that is the tokenized world as well. Yeah.
Talking about regulations, you also received recently VARA approval for tokenizing laser carry funds.
Yes.
So how does it actually, what does this license actually allow you to do in bringing real world assets on chain?
Yeah, I think this is part of VARA's framework. We were the first as a pilot. We got the license. We worked with them for over the last year.
Congrats, by the way.
Yeah, thank you. Thanks. In a way, what we here tried to do was we brought one of our funds, which is Laser's Carry Fund. We actually, it's okay, let's look at tokenizing a fund, and that's what our framework was used for. So we used that framework to tokenize the Laser's Carry Fund and then bring it on chain. Because again, there as well, we found the use case now. Of course, number of funds, including one of our joint venture, Kyo, which is a tokenization platform. which is today has tokenized number of funds out there. And so we felt that having working with the VARA, getting the license, getting the framework in a place will allow us degree of freedom to actually launch some of these tokenized funds. And for us, our first use case has been that carry fund, and then gradually we look at a number of other funds to come as well.
How do you see RWA tokenization shaping institutional participation going forward?
Big time. I mean, that is the main thing, which is starting to pick up significant momentum. Because if you really look at it, what does RWA do? Really, RWA unlocks, I would say, on-chain finance and DeFi. Because RWA brings composability to the crypto market, which does not have. Because the RWA brings good collateral to a digital asset ecosystem which lacks good collaterals. So if you have a money market fund, or if you have it could be a contractual fund of a good A-grade fund, you're bringing these digital instruments into a market which requires. So and today you're seeing equities, tokenized equities, and this is the part that tokenized fixed income, tokenized private credit. Once you have all these come into on-chain, that's really Web3 and DeFi and crypto we actually built up for, really, right? So because ultimately you're bringing value, digital capital, and digital money on chain. The only way it can happen is through RWA, and then once you have that on chain, then it opens up the entire different world. Even today people are talking about AI agents interacting with this on chain, because that's where the real convergence of Web3, AI, and everything kind of really be disruptive value comes through.
One of the things that you also mentioned during our interview, it's important, is the security of
Yes.
funds, especially when you're dealing, let's say, with traditional financial companies. They feel more secure if you provide them, let's say, enough tools that will guarantee that their funds will be secure whilst they're converted into digital assets. When you mentioned about the partner, is it Solidus Labs? Because I know that you partner with Solidus Labs on market surveillance. Are they also the ones that are helping you with security, or not?
No, security side we are mostly in-house. Obviously,
Okay,
we
got it.
use our own custodian, our partner custodian as well. But typically, our security function in-house, because it has to be in-house. We are dealing with large investors, our own capital. Therefore, it has to be protected in-house, because it's a key function. We don't go for outsiders. We may use outside consultant and so forth. Solidus Lab partnership is because for us, one of the major challenges any kind of, I would say, traditional firms find is when they go into DeFi, the challenges around security, challenges around KYC, AML.
Market surveillance.
So, agree. So absolutely. So that's where we are partnered up actually to market surveillance side of it. When you're going into DeFi, high frequency trading, it's extremely important.
So I'm curious how in this case they help Solidus Labs help you to to do the market surveillance, because if I'm not mistaken, you monitor the activity across different exchanges, trading, OTCs, venues, and others.
Yeah, I think some of their technology is very helpful in identifying market behaviors, market abuses, certain patterns in the market, around market abuse. So earlier on, to identify that and make sure that if we are in a certain pool or venue, that we actually take action to exit from those pools or venues if we see kind of, I would say, abnormal activities, which the surveillance alerts that something's happening. Also protect our own activity, because we have, of course, trading activity. We have a number of traders trading that. All our internal activities, the traditional firms do market surveillance to make sure that there's no front running, there's no kind of all the market behaviors are consistent to our own rules and regulations.
Encrypted is your exclusive ticket to the epicenter of technological innovations in the MENA region. So do you believe right now, taking into account that what is happening will we see that, like the institutions will see in 2026, there's more risk in terms of reputation, compliance, that they still will be hesitant, those that were reluctant to go into digital assets, that the current situation, the end of 2025, unexpected situations will, on the contrary, will make them pause for a while?
Some I would say risk averse is here. Most institutions, they're not watching the price of the, I would say, digital assets. If you're just watching the price of digital assets to make a decision whether to go into the asset class, it's a mistake. Because the price process we've seen, or if you take a 10, 15-year time framework, Bitcoin has done tremendously well. If you obviously take a last year or last 3 months, it hasn't done that well, right? So I think some of these decisions are making multi-years. You cannot look at the price process is very noisy.
Yeah.
So you need to look at the adoptions. So it's like things like, DeFi adoptions coming through, on-chain asset management adoptions coming through, RWA is a real deal. Stablecoin adoption is coming through. What does stablecoin? It's disrupt the entire payment, settlement, kind of coordination layer as well, right? So there are a lot of benefit coming through. Means institutions coming into it. Yeah, for sure, the more risk-averse ones will be saying, okay, let's wait. But most of the other major ones, even last 3 months, as I'm saying, despite these price processes, which has been very noisy, very, for some camp, it's painful.
And annoying.
Annoying as well, because it slows down within the natives, the growth, it slows down a bit. But the institutional announcement has been all the way from regulatory, large announcement out of the US, larger banks announcement. It's been real. I mean, it's coming through.
Laser recently executed its first Bitcoin options trade on GFOX. Was it difficult right now, as we are discussing where the market is moving, or do you believe that this will help, like the role of centrally cleared derivatives, they will push institutional adoptions even forward from your side?
I think in the long run, for sure, you need to, because bilateral becomes very challenging, because ultimately bilateral risk is not the way institutions would like to see, and also you need to have intermediators in between, whether more developed clearing operators, because ultimately for institutionalization, one of the bedrocks is derivatives.
Yeah.
Institutions like to optionalize their trade, they like to hedge their trade, they don't want to just buy spot and sit on it, right? The real growth of the derivative market can come through centrally cleared type of, because it's easier, and most of the traditional operators want to have netting benefits because they do traditional assets. So seamlessly they should be able to trade traditional asset derivative, including digital asset and tokenization. When tokenization happens, it's the same thing, right? Tokenized Apple stock derivative will be same as kind of the paper derivative. So when they all converge together, for sure you need to have central clears, because that's how the traditional world works, because capital is efficient. Today, if you don't have centralized cleared platforms, capital use is super inefficient, because you have exchange rates, then you're heavily kind of exposed to one, and the capital cannot be netted because you may have other trades against it. So capital efficiency need to come through, because people may want to put sometimes spread trades. Again, let's say you may put again gold derivative versus Bitcoin derivative. So how do you, if you don't have the netting benefit, you're going to charge on both legs. It's not workable for institutions who are trying to do this in large size.
Can you say, talking about tokenized stocks, because more and more exchanges are trading those, that this is going to be one of the important trends to follow in 2026? We're right now early 2026. In the years to come, let's say 3-5 years.
Yeah.
What else might be like something we have to pay attention to, very close attention?
I personally, in 3 to 5 years, most of the assets today we are talking about, trading, liquidity management, asset management, which includes most of the traditional assets, as you said, equity, fixed income. We are going to go on chain.
Yeah.
Now that's where a lot of the infrastructure built in the Web3 and the digital asset world will benefit, because once they go on chain, the same infrastructure is, that's where then you can leverage DeFi, you can cross asset, and then once you go on chain, it actually, then the next phase of what needs to happen is, which is starting to happen, but it'll take time, is where the user who's kind of interacting with these on-chain products and on-chain asset managers have to feel their user experience remains the same, so they don't see the difference. It's seamless. So it's a user who's using all these products, yield enhancement, whether it's whether it's Apple stock or Treasury or Bitcoin, all on chain. I can cross margin, I can generate yield. For me, the user experience is the same. I'm using same front end and the back end. It can interact with DeFi, it can interact in single layer protocol. So once the user experience remains, I would say, very similar, when the users don't realize backend it's using Web3, that's when you have reached the proper, I would say, use case and velocity, because then, adoption will be very significant. I think we will get there.
Yeah, like Web3 background with,
absolutely.
Web3, let's say, Web2 front end, Web3 back end.
Absolutely, absolutely.
So from this perspective, where do you see there will be more, let's say, a real intersection between TradFi and DeFi in the future? And which DeFi elements they will feel primed for institutional use?
I think where the DeFi brings, especially when you take products on chain, what does it bring? Even today, we were with one of the operators we were speaking. They were saying, "Oh, we have an asset. Today, we want to bring on chain. Why do we want to bring on chain? Because why? They think the asset class cannot be distributed to the wider audience. Wider audience cannot interact. What does if you really look at what does on-chain economy brings? Really, we are trying to go into a kind of this on-chain economy. On-chain economy brings number of factors. It becomes seamless interaction between number of assets without this fragmentation. And also friction cost is less today, which is a significant factor. But also the other thing it brings is your ability to now interact with AI and autonomous agents. Because digital economy, while you have all these assets we are tokenizing and bringing on chain, the other side of digital economy is basically users are becoming agents. Particularly when it comes to how to use or who's going to be using it. Because when the users become agents and you have all these on-chain assets sit together, what does it all converge into a single programmable layer? What it does is suddenly your execution, your transaction execution, coordination, all can happen in a single operating layer. Because you have stable coin for payments, everything can happen on a single trusted layer. I think that's the real world we are working towards when assets are on chain.
Will you, in this case, but will you take into account your so many things that you learned about AI early on, still back in 2012, as you said earlier? I'm just curious, will you right now be, let's say, confident if your AI agent is doing a transaction with stablecoins on your behalf?
For sure.
Yes.
I think we are at that.
That's interesting. Not everybody feels certain about that.
Yeah, I'm for sure, because I believe if done properly, it's already happening. All the micropayments. It's ultimately what does it do? It's like green.
Yeah, but somebody can feel that I'm still not sure that AI agent will do the right transaction and will send it to the right end user where I'm sending if I would be sending this myself.
I think there is technology evolving at a place that those. I'm sure even today, if you ask 3-4 years ago, what likes of ChatGPT and some of these other technology coming through as that disruptions come through, the pace that it's evolving is, you're going to see a lot of this payment, settlement, the coordination, the data management, everything is going to be done through autonomous AI agents. That's the path we are going towards. Of course, humans will have a role to play at intersection of it, actually. But a lot of these day-to-day payments, like let's assume you have stable coin, so good example, or you can have digital assets. You have AI agents. AI agents are going to manage my entire month's payment, mundane things I do. I don't need to get involved. All what I'm doing is every day, when I get an invoice, I'm making a payment. I don't need to get involved in that. The entire programmable layer is there today, right, using Web3, and you have the stable coins. You have the agents to see, okay, what is incoming, what is your outgoing, and also cross-check with my history so that you don't do any erroneous payments, and you do the payments, right? So this is the world we are going to head into, and then of course, the entire kind of on-chain world will speed up that, because once you go on-chain, it opens up a different world.
Thank you so much, Dr. Jess.
Thank
Now
you.
we move to our rapid fire questions. Rapid fire questions. Okay, Dr. Jess, are you ready?
Yeah, go for it.
In one sentence, how would you explain AI to a child?
I would say the easiest way to explain AI to a child is, say, AI is like a super smart robot, which might help you to play games, do your homework, help to trick your parents as well, and wouldn't get tired of you.
Oh, okay, nice. If you could take any blockchain founder on a road trip, who would you like to take it with, and why?
I think,
Who would it be?
I mean, for me, it will still be Satoshi Nakamoto himself, to understand, the whole thesis of not just coming up with the invention of, obviously, Bitcoin itself, but understanding why decided to be anonymous. That's the huge curiosity still, keeps coming back to me again and again, because I think that anonymity with significant success still to remain anonymous, it's unthinkable, yeah.
Talking about Satoshi Nakamoto, if Satoshi Nakamoto were revealed today, what would be the first question you'd ask him, her, or them?
Yeah, I mean, the first question will be why decided coming up with such a disruptive, both technology as well disruptive layer, or disruptive asset, you may call it, and since then not participate in the ecosystem, and also remains anonymous such a long time. And what next? And also, more importantly, ask, has it achieved what he or she thought originally it's going to do 15 years on or 17 years on.
Nice. Name 5 qualities that you believe real entrepreneurs should have.
For sure, grit. That is, you're gonna have good, bad times, and it'll test you a number of times that you may be wrong, and many people question you may be wrong as opposed to you may. So grit is extremely important.
1, 2.
The second is that never worry about failure, because you will come through failures. Many people will question you on that.
3.
3 is still remain, I would say, grounded, because there's a danger is when you have success, sometimes you may lose your origin, where you came from.
4.
The 4 is enjoy.
Towards
after doing all that.
5.
5 is that never give up on what you already started.
Amazing. Yeah. What's one thing you would never do while building a company?
It's a hard one, because I may have done if I was to.
But you wouldn't have done it
yes,
again.
If I start again, I think something I would never do is be sure that the partners and you are partnering up to build your dream, that they all have consistent ideologies. They may challenge you, but that's fine. But they need to be a consistent ideology. Otherwise, that's what creates, I would say, issues later on.
What's one piece of tech you can't live without these days?
I mean, as I said, for me, AI, for sure. That is where where the world is. I mean, already it's all over, and today, day to day, I'm using it. Day to day, most people are using it. So I think I'll struggle to stay without. So even your cell phone has significant AI utility. So.
Amazing. If Lazy Digital were a person, how would you describe its personality in one word?
It is. It's. I would say young.
Young.
It's I would say it's still a very young individual trying to learn while had some success, but a long way to go. And understanding the challenges ahead of you as well.
What's one misconception people have about institutions in crypto?
I think institution adoption or institutions in crypto, I mean, if I'm thinking about large institutions coming in crypto, many people are under the impression it's going to happen fast and it's already there and they're allocating. It's much slower. It will take time, as I said, multi-year trend. And I think the main ones who are committed to it, they'll keep going and they keep building. And leaders will be the early adopters.
Amazing. What's your personal formula for success in this industry?
My personal form is I'm fairly dynamic. I mean, I'm very agile. I'm learning as I go along, and I'm open to challenge. And I think there's a long way to go, and the entire ecosystem has a long way to go. So I wake up every morning thinking that something new is coming. It doesn't mean every new innovation I want to go after, but it keeps me excited.
Amazing. And finally, Dubai for you is associated with?
For me, it's associated with my early life.
Thank you so much, Dr. Jess.
Thank you. Thanks very much for all your time, and it's been fantastic.
Today we had Dr. Jez Mohideen, CEO and co-founder of Lazy Digital. Thank you so much for watching, and see you next time.
Thank you.
From the gleaming skyscrapers of Dubai to the innovation hubs of the Middle East and beyond, Encrypted brings you thought-provoking discussions, exclusive insights, and stories of innovation that will leave you inspired.